It is Friday, June 26th, 2020. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was yet another non-virtual Get Your Ass Kicked at Jiu-Jitsu Friday. A friend of mine and I got together and did some rolling around, did some thing, and arm bars. You gotta have more arm bars in your toolbox, or at least I do. I really like arm bars, and oddly enough, I feel like my arm bars are slightly tighter the way that we were doing them today than I've felt with my arm bar in quite a while. And I don't know, I can only hope that I progress faster in like recovering this information and like remapping it, because it's weird because I'm not going straight back into gi'd jiu-jitsu, and that's what I was familiar with, all along. But I'd had a conversation with a gentleman a while back concerning jiu-jitsu. And it was funny because I didn't really know who he was at the time. And, I had some suspicions. I knew he ran the place that I was at. But as far as, like, his accomplishments, how much jiu-jitsu he had actually done, And, I've been up in the air about 10th Planet. I do like their style, and I like the concentration and focus on pressure maintenance, and that's one of the things. The guy that I've been training with is the 10th Planet guy, and I'm not bagging at all. I mean, I can just barely get a rubber guard, and I'm not there yet. But it's like that. It's like when I was doing this other thing, just like say it was another language, that my hobby / passion or whatever was learning a new language, and I'd been learning Spanish for 3 years, and then for whatever reason I couldn't do Spanish anymore, but I still had this desire to learn an additional language, and so I went to a French class. And so, I'm having to relearn all the words that I learned in Spanish in French now. And so that's kind of like the, I guess that's a kind of close equivalent or kind of like an analogy or metaphor there. I know those are all distinctly different things. Anyway, so it was really interesting because, like I said, it was a variant on the armbar that is probably the one that I get the most. I think I've gotten one 180 armbar, but it's specifically an armbar from the full guard position, where you disengage your legs and you either work your way up under the armpits first, and like have their forearms trapped, and then just like push their head over to the side and bring your leg over their head and extend, or crimp in tight and then extend. Well, I happen to really enjoy this one, and out of all the variations of arm bars, I think that's the one that I've gotten on people the most. But I'll be honest. I'm not Mr. Submission Master or anything like that. I've had a weird year, in not just with COVID and all that. I mean a weird year as far as like injuries and shit like that kind of keeping me back. And actually, I want to say it's been the last 2 years that there have been certain limitations, whether it be a scheduling issue, which was kind of like self-maintaining, and it made me make a value decision, and I think it was a better decision, where I prioritized myself over entertaining this person who is obviously trying to obstruct me because of their own gluttony or whatever. And that's kind of cruel. I mean, but, the fact of the matter is I was, in relative terms, I was his size once before. As a matter of fact, when I was dropping down from my highest weight, I worked at a pizzeria for, about 3 months. And I actually lost weight, and I ate pizza all the fucking time. But I did it in very regimented portions, where I would have 2 pieces for breakfast and then 2 pieces for dinner. And of course they weren't the really high fatty one, with like a lot of cheese or something like that. I mean, I put a lot of veggies on there, a lot of peppers and shit. And so, but that I still lost 40 fucking pounds during that time. Now, of course, I was running during the heat of the fucking summer, so that helps a lot. I mean, and I sweat a lot to begin with, but I sweat a ton during that time. And so anyway, when I see people that are obese or morbidly overweight, I see somebody in that is their stage of their being at the moment. There's nothing permanent about that. That's like, if I were to look back at a picture of me, back in, I would say 2003, 2004, it was 300 pounds. Actually, I was a little over 300 pounds. It was like 320. But the fact of the matter is that I've been working out in one way or another pretty much my entire life. So the idea of physical memory, or my body having a memory for doing certain things, I believe in that. But the thing about it is that it's just as easy to forget as anything else. And the problem with your body is that it constantly wants to forget shit. And so you're constantly having to etch shit in and kind of secure that in your neural pathways and whatnot. And I'm sure at some point or another, all of jiu-jitsu might seem easier, or at least what I know of jiu-jitsu, it's a never-ending thing. But what I'm primarily exposed to, hopefully someday I can actually teach it. That would be nice, right? But at the moment, I'm feeling like I've been bumped back down to like 5 months into my jiu-jitsu journey, where I can get through the warm-up without any issue. I can get through all the repetitions without any issue. But I'm still at a point where I'm going to get tapped all the time. And I don't really care about that. I mean, I've been getting tapped all the time for the last 3 years. But at the moment, I'm kind of injured. And that's what I was saying about this last 2 years. It's like I keep going through these waves where I'm like at the upper threshold of my body's capability when I'm getting to my max, and then like I'll do something outside of jiu-jitsu or even during jiu-jitsu that I'll get injured, and then that bumps me back down again. And I kind of talked about it with somebody, my partner today, where I was saying that, you can't really stop training. Even if you do get injured or whatnot, you can't stop training because, the rest of your body is still there. The rest of your body is still functional, and it just wants to forget as easily as the part that's injured, And so it's like, if you give up during that time, you're atrophying all the way around, and it's going to be that much harder to get back when you're ready to. Anyway, let's go ahead and throw down with some music. And we're going to go with body count to start off with, because that's just what we do. But the song, exactly which song to play. I think this one, because we haven't played it in a very long time, Talk Shit, Get Shot, here on Coin Metal, First Dance. And that was Sixth with Where Do We Fall. Anyway, as far as what we're going to get into today, I got a whole bunch of stuff. I did catch this thing, and this is not really what we were going to talk about today, but I do like to try to keep abreast of certain events within mining. Because I think that the mining really is the key, and that I believe that a lot of things are going to come from mining because it incentivizes participation, and it's completely independent of any one government organization. And so I think that this creates a new realm of competition and collaboration, and I think that's the important part about it. That it's not just participation for the benefit of yourself, but also the benefit of others, people that you don't even know. But because the reward is universal, so is the benefit. Anyway, so I got this thing here. It's on beincrypto.com. Ousted Bitmain co-founder halts Antminer shipments. And this is written by Martin Young on June 15th, 2020. And I guess by Ryan Smith. How does that work? Anyway, double penis. Reports are emerging from the People's Republic of China that Bitcoin mining giant Bitmain is delaying shipments of the firm's popular Antminer rigs. The news was revealed by the head of marketing at Hashkey Hub, Molly, on her Twitter account, citing a translation from Weibo, China's leading microblogging portal. Quote, "Don't order Antminer from Bitmain anymore because you won't be able to receive it for a while. After McCree took back the control of Bitmain, he's now controlled the Bitmain's factory in Shenzhen and started to stop the shipment of Antminers." Power struggle intensifies. Local media outlet Blockbeats also reported the development last week, adding that that company co-founder McCree Jean, also known as Jean Coutuin, has taken control of the facility and prevented workers from processing orders and shipments. The firm's 2018 initial public offering prospectus details a subsidiary called Shenzhen Century Cloud Core Technology, which is responsible for manufacturing and packaging its Antminers at a warehouse. Jean remains the director of the subsidiary, despite his removal from Bitmain itself. Earlier this month, Being Crypto reported that Jean stormed the facility's Beijing offices with a group of armed guards in order to seize control. Wow. He also reportedly offered cash bonuses of 10,000 renminbi, around $1,400, to employees if they returned to work that same day. Turbulent past, gloomy future. Bitmain has had a turbulent few years of power struggles, leaving the firm deeply divided. The founders have forced employees to take sides. Meanwhile, many customers have been left in the dark. Jean claimed that former fellow co-founder Jian Wu had illegally removed him from the company in November of 2019. Legal action followed, and Bitmain suffered as a result. The company laid off staff and frequently shuffled management. As the battle rages on, Wu has attempted to reassert his power. Last week, he issued a statement claiming that he is taking legal action against Jean for halting shipments. Bitmain appears to have forked, added Molly, who explains that Wu still owns the intellectual property. She also argued the negative case for Bitcoin Cash, which Wu outwardly supports. According to the CEO of BitRiver, Igor Runets, who runs the largest mining co-location site in Russia, clients are switching to hardware from rival firm MicroBT. Speaking to NASDAQ, he added, quote, "We have many clients who are waiting for Antminer S19 devices from Bitmain. Customers were not satisfied with the long wait time and, I believe, was partly caused by internal issues. We really hope the situation will get to normal by September and won't affect production time. Otherwise, there will be a massive erosion of trust in the company." Social media hijack. Reports also indicate that Zhan may have gained access to Bitmain's official WeChat channel. A letter posted on the Bitmain company website last week stated that unauthorized actors had gained access to the account. It also claims that posts made since last Thursday were all fake. Later that same day, another letter appeared with an updated company seal, ordering all employees back to work. The letter added that the Beijing office will enforce attendance checks for June and that all employees at that office will only receive full salaries if they have checked in for 13 days. It appears the power struggle is far from over. Ultimately, though, Bitmain and its clients will suffer. The drama plays right into the hands of rival Bitcoin mining hardware manufacturers. Fire damages mining farm. In a related development, a fire at a Bitcoin mining farm in Yunnan province on Friday destroyed thousands of mining rigs. Blockbeats posted a video of the incident via Twitter over the weekend, adding, quote, "This Friday night a fire occurred in a large Bitcoin mine in Yunnan, China, causing thousands of Bitcoin mining machines to be destroyed. The local police were investigating." It remains to be seen whether the fire was related to the ongoing power struggle at Bitmain. Bitcoin prices retreated during the Asian session on Monday morning, falling 3% to below $9,200. Prices have recovered somewhat since. BTC market share is also on the decline this year, and mining hardware woes are only likely to add to that sentiment. I think we're seeing a spillover of multiple effects. There is growing interest in cryptocurrencies. However, Bitcoin itself is unable to fulfill a lot of those interests or satisfy a lot of the use cases that people are wanting to put it to. It's not economical. There's options that are cheaper and faster. So again, I think this is an evolution that Bitcoin will go through along with the rest of crypto. But these are just some of the factors that will play out into crypto at large. That at some point or another, maybe we'll see a drop in participation in mining. And this will act against the security of Bitcoin. Where it's not going to be as stable as it was. And so that'll probably depreciate a little bit more confidence out of Bitcoin and into altcoins. And this is good for everybody. The problem with crypto is that a lot of people think that you can just assume things about crypto. That you can assume that everything that people say is as it's true because it's on the blockchain, right? No. And it's not that it wasn't true at one point. It's that the truth could be changed at some other point. And there are plenty of instances where projects have been developed specifically for this purpose, like Accenture. Back in, I think it was like 2014 or 2015, they made an editable blockchain. And now all blockchains are editable by the miners. but this is something that is constantly happening. That there's always some entities out there that want the Bitcoin to be forked a certain way, and so that's the way they mine it. And then others that wanted to go another way. And whoever is the majority, that kind of dictates the consensus of which protocols are valid, or which ones will be considered valid. And so I think that this flow, this dynamic, these incentives, they have not changed. They have not changed at all. And that's probably the only thing that hasn't changed about it. Because the reward is out there for everybody to get, it changes a lot of the dynamics that we're used to with regard to banking and finance and whatnot, because you don't have a central authority saying this is the way you're going to do it, and if you don't do it this way, and I mean you do have some centralized entities that say this is a way to do it, this is the way we prefer that you do it, this is the option that we hope you will choose. But there's nothing locking you in as a user or a miner to any specific way. It's only that it's more beneficial for you to go along with the rest of the group because that's the way they're making money. However, if you can see something, a way to mine or an adaptation to make in your mining that will make things better for you, it's in your best interest to do it. And if enough people agree with you, you will be the trendsetter. Your implementations will be the ones that other people utilize. And this is a truth of Bitcoin that I think is really underplayed. Everybody assumes that it's Blockstream. They're the ones that make the BIPs, and they're the ones that possess the access to the GitHub repository, and they can dictate what BIPs go in and which ones the miners can and cannot implement. No. This is an illusion, complete and total illusion. The miners are free to implement whatever BIPs they wish, and also stop flagging support for whichever ones they wish. Because it's their hardware. Anyway, I got a few other things that I wanted to get into today. And actually, I sorted out quite a few of them here. Let's see here. Where is it? This one. This one, we've talked quite a bit about security on here, on this show, and encryption and how important encryption is to making things secure. Well, it seems that U.S. lawmakers are trying to break security provided by encryption. And I don't think they understand what they're really asking for here. Anyway, so this is by Kevin Helms. It's on news.bitcoin.com. U.S. senators introduce lawful access to Encrypted Data Act with backdoor mandate. Man. U.S. lawmakers have introduced the Lawful Access to Encrypted Data Act, and let me see if I can find this thing, to ensure law enforcement can access encrypted information. This bill is a full frontal nuclear assault on encryption in the United States, one expert says. It requires manufacturers of encrypted devices and operating systems to have the ability to decrypt data upon request, creating a backdoor requirement. Lawful Access to Encrypted Data Act. Senate Judiciary Committee Chairman Lindsey Graham and U.S. Senators Tom Cotton and Marsha Blackburn introduced the Lawful Access to Encrypted Data Act on Tuesday. The bill, quote, would bring an end to warrant-proof encryption in devices, platforms, and systems, the committee's announcement reads. Quote, terrorists and criminals routinely use technology, whether smartphones, apps, or other means, to coordinate and communicate their daily activities, Senator Graham said. He claims that law enforcement could not access, quote, virtual information in many recent, quote, terrorism cases and serious criminal activity, even after the court order was issued. Senator Cotton elaborated, quote, tech companies' increasing reliance on encryption has turned their platforms into a new lawless playground of criminal activity, adding, this bill will ensure law enforcement can access encrypted material with a warrant based on probable cause and help put an end to the Wild West of crime on the internet. Bullshit. The bill also allows, quote, the Attorney General to issue directives to service providers and device manufacturers to report on their daily ability to comply with court orders, including timelines for implementation. The committee's announcement reads, quote, the government would be responsible for compensating the recipient of a directive for reasonable costs incurred in complying with the directive. No, you can't possibly fucking do that. After you've broken their security, you can't recompense them for that. Continuing. Furthermore, the committee noted that the bill, quote, promotes technical and lawful access training and provides real-time assistance and directs the Attorney General to create a prize competition to award participants who create a lawful access solution in an encrypted environment while maximizing privacy and security. Oh, this is so wonderful. Backdoor requirements hurting people. Rihanna Pfefferkorn, Assistant Director of Surveillance and Cybersecurity at the Center for Internet and Society at Stanford Law School, calls the bill, quote, a full-frontal nuclear assault on encryption in the United States. She exclaimed, quote, this bill is the encryption backdoor mandate we've been dreading was coming, but that nobody during the past 6 years of renewed crypto wars had previously dared to introduce. Well, these 3 senators finally went there. Andy Wilson Thompson, Senior Policy Analyst at New America's Open Technology Institute, shares the sentiment, explaining, quote, this bill is just another attack on encryption and trying to portray it as a, quote, balanced solution that could protect privacy is just an attempt to distract us from its true intent. Thompson focuses on issues including digital security, vulnerabilities, equities, encryption, and internet freedom. The Lawful Access to Encrypted Data Act is, quote, actually even more out of touch with reality than many other recent anti-encryption bills, said Andrew Crocker, a senior staff attorney with the Civil Liberties team of the Electronic Frontier Foundation. He added that the new bill is, quote, even worse than Earn It, which he described as, quote, a dangerous anti-speech and anti-security bill that would hand a government commission led by the Attorney General the power to determine, quote, best practices online. No, they wouldn't. They would create and inspire the option of networks that they don't have access to, physical or otherwise. Continuing on. According to the Senate Judiciary Committee, quote, once a warrant is obtained, the bill would require device manufacturers and service providers to assist law enforcement with accessing encrypted data if assistance would aid in the execution of the warrant. Crocker pointed out that the new bill would, quote, give the Justice Department the ability to require that manufacturers of encrypted devices and operating systems, communications providers, and many others must have the ability to decrypt data upon request. In other words, a backdoor. The EFF attorney added, quote, the bill is sweeping in scope. It gives the government the ability to demand these backdoors in connection with a wide range of surveillance orders in criminal and national security cases, including Section 215 of the Patriot Act. He warned, "Not only does this bill disregard the security of users, it allows the government to support its need for a backdoor with one-sided secret evidence any time it feels a public court proceeding would harm national security or enforcement of criminal law," emphasizing that, quote, "the requirements of the Lawful Access to Encrypted Data Act would impose upon companies would undermine the security and privacy of ordinary people, while the real targets of criminal investigations could just migrate to new encrypted services," Thompson cautioned. Quote, "This bill would ensure that companies that provide products and services used by millions in the United States have to offer weaker encryption technology, putting all of their users at risk." Yeah, absolutely. The policy analyst noted, quote, "The idea that an exceptional access backdoor can be safely deployed solely for government use has been debunked over and over again by experts, including former senior members of the U.S. Justice Department. The Lawful Access to Encrypted Data bill can be found here. Haha. There's a link. We're gonna fucking look at it. And hopefully it's not too long. Oh shit, it's 52 pages. I wasn't planning on diving into this thing, so I don't know. You can communicate to me about it on social media or something. But yeah, I think that any effort to disrupt encryption or decrypt things at will or whatever, I think you're talking about some dangerous shit there. I mean, encryption exists for a reason. It's because there's shit that you don't want everybody to know, but you can't necessarily afford to sequester the data from everybody's access. So maybe they can see it, but maybe they can't decrypt it. Well, these monkeys think that if you take the ability to encrypt it away, or at least the ability to use encryption to stop them from knowing what you don't want them to know, they do not understand. We use the same codecs that governments do. If our shit has backdoors in it, their shit will have backdoors in it. And I mean, even worse, they're talking about having competitions. That means that people will have open access to the source code for it. And if it's worth it for them to crack the encryption, they'll fucking do it. It's fucking stupid. Completely fucking stupid. Anyway, let's go ahead and throw back down with some music. And as far as where to go, here we go. Voivod, The End of Dormancy, here on Coin Metal. And that was a little prong there with Retreat. Anyway, as far as what else we're going to get into today, I actually lined up a series of articles, and hopefully we'll get to all of them. And this one, I think we'll start with this one. It's on Cointelegraph.com, and this is by Colin Post, so yes, penis. And this is authored June 22nd, 2020. CBDCs don't fix broken monetary policy, say execs at Stablecoin Saga. As countries around the world dive into central bank digital currencies, CBDC, many in the crypto industry look forward to what that means for adoption and even lucrative partnerships to develop such tokens. However, at least some commenters have noted that national CBDCs will likely disappoint those looking to update monetary policy. Quote, a change in packaging. Speaking to Cointelegraph, Ito Sadaman and Barry Topov respectively, the founder and chief economist of Saga, a global stablecoin project, cautioned against the wave of optimism surrounding CBDCs. Quote, "It's basically a change in packaging, a change in technology, a welcome change," Topf described. "Essentially, it still remains a one nation or one entity fiat currency. The value of the currency is determined by the sovereign or group of sovereigns behind it." Mann agreed, though, that he described himself as more optimistic than Topf when it comes to CBDCs. Quote, "I think that CBDCs are definitely good news in the sense of easing the payment railways and repackaging in a way that is more suitable to the global economy." I think both these guys are fucking wrong. Anyway, continuing. Saga's SGA token and a global peg. Saga operates a stablecoin, SGA, that launched in December. It is pegged to special drawing rights. The SDR is a basket of currencies that the International Monetary Fund bases on a varying ratio of dollars, euro, yuan, yen, and pound sterling. However, Mann explained, quote, "We are separating slowly from the SDR by lowering the reserve ratio. The reduction of the reserves would seem to put SGA on track to replicate fiat, but Mann says the difference is that SGA's reserve changes per a mechanism that anyone can access." When you look at CBDCs, I don't know of any central bank that is about implementing monetary policy based on a consensus mechanism. Quote, "The trust we are reaching for should not depend on us being better people than others. It should be systemic." Mann continued to explain. Topf, who spent 13 years at Israel's central bank, also identified transparency and consensus as SGA's killer app. Quote, "We sought a monetary model that was more advanced and objective than any central bank could produce. Some people look at cryptocurrencies and see a technological innovation. We began working on this looking for a monetary innovation." Facebook's Libra stablecoin similarly looked to a global basket of currencies for backing, but would initially be able to adjust that basket at will. The company ultimately had to... Damn, got the yawns really bad lately. Anyway, continuing. The company ultimately had to back down from this mechanism when U.S. regulators stonewalled the nascent project, largely reasoning that this basket made the coin look suspiciously like a security. Based in the UK, SGA did not have to deal with U.S. regulators as early on. It remains unavailable in the U.S. as well as in Israel. Yeah, that's a pretty good indication that it will not pass muster. It will not pass regulatory muster here in the U.S. So, in effect, they're pre-selecting themselves to be unavailable and completely useless to Americans. So, the thing of it is, though, is that it's not really up to anybody to say that we can't participate in these projects. And whether or not you decide to, that's up to you. But, in truth, there is no government agency, as long as you're not actually attacking somebody else's work, you're not disrupting a cable station or some shit like that. They really have no reason to intercede in your activities on your computer. And but more to that end, I got this other article here. It's on news.bitcoin.com, and this is by Jamie Redman, and I believe Jamie is male, so yes, penis. Ethereum network fees jump above Bitcoin transaction fees for 2 weeks straight. And this is authored approximately a day ago. This week, digital currency enthusiasts have been discussing network fees, specifically transaction fees associated with the Bitcoin and Ethereum blockchains. Last Sunday, on June 21st, one Ethereum proponent noted that during the last 16 days, Ethereum users have paid more to leverage the network than Bitcoin users. Digital currencies like Bitcoin, Ethereum, Bitcoin Cash, Ethereum Classic, and Litecoin all have a network or a minor fee associated with sending each and every transaction. This means in order to send a fraction of Bitcoin, there must be enough Bitcoin in the wallet to also cover the sending fee. At the time of publication, the data site BitInfo Charts shows the average Bitcoin network fee was about $1.14 per transaction on June 22nd. Ethereum network fees show the average fee on that day was around 62 cents per send. Bitcoin Cash has an average fee of 0.006 cents per transaction, or 0.6 of a U.S. penny. Now, not all BTC fee recording websites are exactly the same, as there are many different averages depending on the site used. According to the fee calculation website offered, billfoldle.com, the next block fee required to have your transaction mined on the next block, 10 minutes, is 87 cents. Similarly, for June 23rd, the average fee for getting into the next 3 blocks is the same price. If an individual paid 73 cents per BTC fee, the transaction would possibly confirm within 6 blocks, 1 hour. The 6-block fee would bring Ethereum blockchain transaction fees much closer to the current Bitcoin fees, which BitInfoCharts.com shows as 62 cents. Coinmetrics charts show that Ethereum transaction fees have been consecutively higher than Bitcoin's fees in June. The well-known Ethereum proponent on Twitter, Eric.eth, Eric Connor, told his 15,000 followers on Sunday, quote, "For 16 straight days, Ethereum users have paid more to use the network than Bitcoin users." Since the tweet, Ethereum transaction fees have dropped, according to Coinmetrics data. The web portal ethereumgasstation.info, the website that provides Ether gas price recommendations, notes that ETH fees are much lower than BTC's average as far as stats on billfoldle.com is concerned. All the fees measured in GWEI? What the fuck is that? Highlight that the gas amount it takes to send an Ethereum transaction and ERC20 token as well is 26 cents for the fastest transaction confirmation time. Every tier lower is only a US penny cheaper for standard and safe but low fee transactions. During the last few years, and especially since 2017, we know that when the price of Ethereum or Bitcoin rises and is used more often, fees grow much larger. At the height of 2017, Bitcoin fees jumped higher than $50 per transaction on December 22, 2017. On that same day, Ethereum fees were around $1.40 per transaction. Now, this occurrence doesn't happen often with Bitcoin Cash since the block size has been increased to 32 megabytes. Before the block size upgrade, on that same day in mid-December 2017, the average BCH fee did rise to 31 cents per transaction. However, during the September 2018 stress test, after confirming over 2.4 million transactions per day, outshining Bitcoin's best day by 5 times, The average BCH transaction fee was 0.003 cents per transaction. Since then, BCH fees have not risen past the 0.008 cents transaction fee naturally and have been consistently under a U.S. penny per transaction for the last 2 years. According to Coindance stats, it is currently 815.51 times more expensive to transact on Bitcoin on June 23, 2020. Transacting on the Bitcoin Cash chain is also much cheaper than transacting in Ethereum, as it is 8,566.66% more expensive to transact in Ethereum than it is to leverage Bitcoin Cash. This data is all publicly available by leveraging sources like ethgasstation.info, bitinfocharts.com, Coinmetrics data, and billfold.com. Yeah, these are exactly the kind of decisions that are incumbent upon all of us to make individually. And I think this is one of the powers of Bitcoin and cryptocurrencies that many people undervalue. And it's because they want to diminish this aspect, because when you start looking at cryptocurrencies from this perspective, you start seeing which ones are better for you, which ones serve you, which ones are serving some third party as their backbone for their network activity. And as such, I think that when we're going forward, we're going to find that Bitcoin is going to need bigger blocks, and we're not going to be able to count blocks by block weight because it's costing us too much block space. But that's just my perspective. Anyway, the next one I got here is, this is kind of funny. Give us a little direction here. DOJ indicts founder of anti-money laundering Bitcoin project for money laundering. And this is authored on June 25th, 2020 at 1744 UTC. And this is authored by Nicholas D. So yes, penis. The U.S. Department of Justice, DOJ, indicted the founder of AML Bitcoin on money laundering and wire fraud charges. The U.S. Securities and Exchange Commission also filed charges alleging the AML Bitcoin team violated federal securities laws. According to a court filing dated on June 22nd, Texas resident Roland Marcus Andrade, the founder of NAC Foundation, allegedly raised funds by conducting an initial coin offering for tokens representing AML Bitcoin, telling investors the tokens would ultimately be converted into actual AML Bitcoin, which isn't actual Bitcoin. The SEC isn't actual Bitcoin, that is. The SEC and DOJ also charged longtime DC lobbyist Jack Abramoff on conspiracy, lobbying disclosure, and deceptive practices counts, alleging he helped mislead investors in the project. Andrade told CoinDesk late on Thursday he was not guilty of the charges, claiming allegations were, quote, retaliation for his opposition to a previous case. According to Bloomberg, Abramoff will plead guilty and pay more than $50,000 in disgorgement and interest. In its white paper, the NAC Foundation claimed that AML Bitcoin cryptocurrency would include features that would allow the cryptocurrency to comply with anti-money laundering, also referred to as AML, and Know Your Customer regulations, KYC, and laws by using biometric technologies along other methods to confirming the identities of participants in transactions using AML Bitcoin, the DOJ filing said. According to a 2018 press release, NAC Foundation claimed AML Bitcoin was, quote, the world's only patent-pending digital currency with anti-money laundering, know your customer, anti-terrorism, and theft-resistant properties. The DOJ filing was first shared by Seamus Hughes, George Washington University Deputy Director, Program on Extremism. Andrade tried to raise up to $100 million during the ICO, which occurred in late 2017 and early 2018, the filing claimed. According to the SEC complaint, Andrade raised about $5.6 million from 2,400 investors. According to the DOJ filing, Andrade and unnamed colleagues, quote, made public statements and statements to potential purchasers that misrepresented the state of the development of the project, created a fake rejection campaign, made statements indicating that the NAC Foundation was close to working with government agencies, and misappropriated money obtained through the sale of AML Bitcoin. The fake rejection campaign centered around National Football League, the DOJ filing said. Andrade, NAC Foundation, and his associates claimed that the advertisement would have aired during the Super Bowl if the television network aired the Super Bowl ad. Airing the Super Bowl and the National Football League had not rejected the advertisement as being too controversial. The filing alleged, in fact, the NAC Foundation did not have the funds to purchase the advertising time, and the advertisement was never reviewed or rejected by the network or the NFL. According to the DOJ, Andrade also claimed to have substantive meetings with the government of Panama and an elected official in California. The filing alleged that the Panama claims were overstated, and while Andrade was present at a roundtable discussion and had his photograph taken with the California official, AML Bitcoin was not discussed. Close to $1 million was spent on a new home and real estate, the DOJ filing alleged. According to a March filing, U.S. officials have also filed to seize, quote, one parcel of real property owned at least in part by Andrade and his wife. This filing details how an individual dubbed Victim 1 invested $1 million into the AML Bitcoin project, but transferred the funds into a JP Morgan Chase account held by JD, an associate of Andrade. The funds were then allegedly transferred to a third party, quote, who acted at the direction of Andrade, out JP Morgan, and then to an account belonging to NAC Payroll Services, Inc., and then to an account at Wells Fargo owned by Andrade, and then to a personal account at Woodforest National Bank. Andrade claims he did not personally convince the victim to invest in the project. The March filing alleges that these funds were then used to purchase a residence from a Texas home building firm. Quote, to date, Andrade and the NAC have not made any meaningful progress towards developing a 10 coin, AML Bitcoin, or ABTC, the filing said, referring to two other names affiliated with AML Bitcoin. This case is ongoing, according to court records. You know, I probably covered at least one of these projects here on this show. Update June 26, 2020. This article has been updated with additional changes by the U.S. Securities and Exchange Commission and comment from Roland Marcus Andrade. So yeah, I don't feel sorry for these people. They obviously made claims to investors, and those investors made decisions based on those claims, and then they turned around and they pissed away the money on stuff for themselves. So, yeah, I don't feel sorry for them. But there is more to this story, or at least CoinDesk has another article by Nicholas D. authored on the 26th of this month, i.e. today. And so yeah, let's get into this one. And this is by Nicholas D. So yes, penis. AML Bitcoin founder claims DC lobbyist Jack Abramoff, U.S. government, are, quote, extorting him, which sounds about right to me. The founder of AML Bitcoin project claims the U.S. government is, quote, extorting him after he was indicted on money laundering and wire fraud charges. The Department of Justice and Securities and Exchange Commission filed lawsuits against Roland Marcus Andrade on Thursday, claiming he misled investors while raising funds for a 2017 and 2018 initial coin offering for AML Bitcoin, a crypto token that was supposed to be designed to be compliant with anti-money laundering and know your customer regulations. Alongside Andrade, notorious DC lobbyist Jack Abramoff was also indicted, though he has already pled guilty and faces potential jail time, according to Bloomberg. Yeah, as soon as I saw that Abramoff was getting into crypto, and there's another one, Larry Summers. Don't trust those guys. Anytime you see one of these guys associated with a project, just about face and bail the fuck out. Continuing on. In a video interview Thursday night, Andrade told CoinDesk the charges were bogus and that he is, quote, a victim of government corruption. Abramoff was working with the government and tried to get me to sell my company for $100 million, Andrade wrote in a direct message from the AML Bitcoin Twitter handle. They demanded that I paid Abramoff $40 million so he could spread the wealth, he wrote. Quote, if I had no technology that is completed right now and trading, then why were they trying to force me to sell it? This is just an attempt by the government to destroy my company since I refuse to play ball. The project went live earlier this year, he said, pointing to L-Bank Exchange, which appears to be trading the asset. Andrade further claimed that the U.S. government is trying to create its own cryptocurrency based on the AML Bitcoin project, pointing to his legal filings for evidence. The U.S. government is now trying to create their own compliant digital currency based off of my technology, and they clearly see me as a threat, he said. While there are private efforts currently underway to create a U.S. central bank digital currency, i.e. a digital dollar, the government itself has yet to publicly advocate for a tokenized version of the greenback. $5.6 million raised. The SEC claimed Andrade raised $5.6 million from 2,400 investors, falling well short of the $100 million he originally tried to raise. About $1 million of this came from a single investor, identified by the DOJ as Victim 1. In a court filing related to a separate but ongoing case, Andrade claims the U.S. government manufactured the victim. Yeah, probably. Quote, it was the government who contacted Victim 1 and suggested to him that he had been defrauded, the filing said. CoinDesk spoke with Victim 1 on Thursday. The money manager confirmed he was informed of the allegations by the Federal Bureau of Investigation, but he said he was a victim of fraud. A friend introduced him to the project, and his employer was not involved. Victim 1 told CoinDesk, requesting anonymity due to his concerns about professional blowback. He also confirmed he was unaware of the fraud allegations against AML Bitcoin until the FBI called him. Victim 1 indicated that he might pursue civil charges against Andrade at some point in the future. Victim of corruption. For his part, Andrade was defiant. Quote, the SEC and the DOJ have the evidence already that proves my innocence. That is why in various filings I had no choice but to make the documents public. Andrade wrote in many of the DMs, referring to a separate ongoing case, quote, "This was aggravating the DOJ because I was ripping their case apart. I am the victim of government corruption, and we will fight this." He told CoinDesk he had reached out to the SEC's FinHub division, the regulator's fintech division that acts as a point of contact for startups, to confirm his token was not a security. He said the regulator did not respond. "I did not care if they said we were a security because I was willing to make any changes the SEC required," he said. "Instead of helping, they took my documents and came after me." According to the March DOJ filing, U.S. officials had previously filed to seize, quote, "one parcel of real property owned at least in part by Andrade and his wife." Andrade also claims, quote, "he was the victim of corruption in a response to that complaint, and laid out an elaborate conspiratorial interpretation of events involving Abramoff, a former U.S. representative, Dana Rohrabacher, and Jared Kushner, U.S. President Donald Trump's son-in-law. The filing alleged federal investigators are attempting to force Andrade to target, quote, "bigger political-based targets, including Abramoff and Rohrabacher, in an attempt to somehow influence the 2020 presidential election." Yeah, all that stuff is up in the air. I don't usually give any credence to those kind of claims until it bears fruit. You know, it really remains to be seen. But yeah, I think it's entirely plausible that they're shaking him down. They were probably targeting somebody bigger and trying to use him to help them. But really, they're just trying to use him to destroy himself. Because then they would later turn back around and say, "No, we had no association with this guy. Everything he did was a criminal activity, and he's completely fucked. You can have at him, DOJ." And that's about it. You know, it's the problem with being an entity such as a developer for any kind of project. And ICOs in and of themselves, like I said, I think they're completely stupid funding models to begin with. There's no guarantee that you can get the developers to execute fully on the promises that are made during an ICO's sales pitch. And this is a problem that they will continually face. The best way to launch a project or a coin is to launch it as an independent token. One that's not affiliated with any kind of other blockchains, that's not dependent on any other kind of blockchains. You know, so basically one that's not dependent on Ethereum, not dependent on Bitcoin, but its own coin with its own blockchain, its own miners, its own wallet. That's the best way to do it. You're going to find this out one way or another. One of these coins, it's going to get a lot of shit attached to it, billions of dollars worth of transactions and other people's monetary value, and somebody else is going to figure out how to get it. And you know, with the light on this whole decrypt on command bullshit that the government is now trying to pitch for, you know, it becomes obvious that they just want to be able to gank people's money at any time. So, yeah, I don't see that being very, very successful. I think that if politicians are as politicians are on money, that they will decide in their own best interest to reject that bill. Anyway, I got this thing here, and it was originally on Zero Hedge, but I think I might have found the original article, so I'm just going to go straight to it. Yeah, and this is on NorthmanTrader.com. Busted by Sven Henrik on June 26, 2020. First, they dismiss you as a conspiracy theorist. Then they join you. The secret is out. The Fed is busted. Central banks have distorted asset prices far above the economy. I've been harping about the market cap to GDP ratio for a while and even called the Fed's asset price distortion operation a direct threat to the economy. Now it appears that the IMF agrees. Quote, the disconnect between markets and the real economy raises the risk of another correction in risk asset prices should investor risk appetite fade, posing a threat to the recovery. Posing a threat to the recovery, this was precisely my point on CNBC Fast Money last week. The Fed is in danger. None of what we are seeing here is normal nor healthy, as seen in the market cap to GDP. And to be clear, everything is about the Fed. It's gotten so bad that a broad sense of resignation is making itself felt. Wall Street and analysts are reduced to cite nothing but the Fed and further stimulus to justify buying stocks narrative. Everything is so distorted that the very tenets of capitalism are crumbling. Tim Seymour acknowledged as much last night. Capitalism is dead, and the Fed killed it. The very notion of price discovery is reduced to a central bank command order operation, ever more ready to interfere in an ever more frantic pace, fearful of any downside in markets. Just take the month of June, 2 corrective moves in June, and both seeing markets bounce back on what? The Fed coming to the rescue? And there's a title here. It says, stocks rally on the Fed's plan to buy individual corporate bonds. Bank stocks reverse higher as regulators ease Volcker rule. JP Morgan Chase rises 2%. I keep asking how desperate they are behind the curtain. One can't help but wonder if we are approaching a moment of singularity. And Sven Henrik put on, I guess it's Twitter here, the moment of singularity when central bank intervention no longer works to boost asset prices. For all the bullish narratives out there, nobody can hide from a very, very self-evident fact. Markets peaked on June 8th. That was the same day I asked the Crash 2 question. People must think of a crash as a fast event, but that's not necessarily so. February to March was a crash because it happened so fast, but 2000 was a crash and it took over 2 years to play out. Nothing happens in a day, a week, or a month. And so I went on to highlight some charts that suggest something more sinister may be in play than currently recognized. Markets did peak on June 8th, and the island reversal patterns we discussed on Straight Talk number 6 remain in place. And there's some neat charts here. Neat charts. All of them peaked on June 8th. Including SPX and the VIX, bottomed that day and have broken out since. The pattern busted to the upside. All except one index, whose new record headlines made these market peaks fade into the background. The mighty Nasdaq managed to hit all-time highs on a negative divergence, hitting a key trend line before rejecting. And the market cap concentration of the Nasdaq hiding the most striking fact. Equal weight remains below December 2018 lows, also peaking in June. Hence, I call this a bear market. A bear market that hides in the details hidden beneath and asset prices distorted by the Fed that also can't hide from this truth. The market remains about control. It can't maintain asset price levels this historically disconnected from the economy without artificial intervention expanding. reduce it by a sliver, and the asset prices drop. So far, the Fed has succeeded in its mission to save markets from pain commensurate with the crisis unfolding, but it is killing capitalism itself in the process. Now desperately intervening in one form or another on every down day, the Fed soon will run out of things to do and buy, and market participants, having chased nothing but the Fed put, have greatly aided and abetted this historic distortion. I've called this a battle for control between fundamental reality on the ground and artificial liquidity injections. Everything we're seeing are vertical distortions that are non-sustainable. But, worse than vertical, they are not changing reality on the ground. They are just masking it. No bull market without central bank intervention has been proven beyond a reasonable doubt. The Fed is busted, and Wall Street exposed to be nothing but a suckling at the Fed's liquidity chest. Rallies still occur when the Fed intervenes, but despite 2 interventions in June, prices now remain below the June 8 peak. The Fed and markets now have to prove they can exceed above these prices or potentially face to the point of singularity. No bull market, even with central bank intervention. If they can't, then this bear market will come out of hiding. Yeah, I think it is a interesting perspective. You know, especially when you start seeing things like correlations across disparate markets, it becomes kind of obvious that the distortions that are being hid are actually on the other side of the exchange rate. You know, so if we're talking about markets that are based in US dollars, it would be the US dollar where the distortion is happening. Anyway, let's go ahead and throw back down with some music. And where to go from here, though? That's a good question. Well, it's kind of obvious that we will be hitting a wall of some sort or another at some point or another in the future. But until then, we're just going sideways for this seemingly endless time here on Coin Metal. And that was Irreversible Mechanism. And it is with that I'd like to close out this episode. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Monday at 8 p.m. Pacific Standard Time, and so until then, I want y'all to trade safe. Do your homework! And watch out for your own bunghole, because nobody else is going to do it for you. And we've already played our last dance, so we're just going to close this one out for this evening. First time in a long time that I've had to do that, but we're out of time. So anyway, we will be back again on Monday, and y'all have an excellent weekend. Good night.